Partnerships. Let's quickly go through the partnerships so that we can understand the basics before we can record in the books of accounts. As you can see here, we do have the specialized account. I'm not going to go through the background and the evolution of accounting of a partnership, so I'm just going to talk about the accounts for now. As you can see here, I said the specialized general ledger accounts, and we've got the capital accounts. Remember, even under the sole trader, we had capital account, but the capital account was for the single owner. But still under the partnership, we need to have the capital accounts. But those capital accounts will be at least two, because you know that partnership has got at least two partners. So again, the capital accounts will be classified as owner's equity. They are also part of the statement of changes in equity, and they are also part of the statement of financial position. The next account, we have got the current accounts. Current accounts, you can call them the individual accounts for the partners. Remember, the partners have invested in this partnership, so they deserve to be given some of the benefits. So whatever we give partners from the business will be recorded in their current accounts. And remember, the current accounts can either be a negative or a positive, depending on whether the partner has got an amount of money that is owed to him or he owes the business. Again, the current accounts will be the owner's equity. We do have the drawings accounts, like under the sole trader. Remember, drawings is when the owner took something from the business for own use. The same applies to the partnerships. The partners may decide to take something for own use. Again, the drawings will be part of what? The owner's equity. But drawings in this under the partnership will always affect what? Current accounts negatively. So it means if a partner has taken something for own use, so that amount or that item that has been taken for own use will affect the current accounts of that particular partner negatively. Okay, so we need to know that the drawings affect what? Current accounts. Sometimes you've got the loan from or loan to partners. You know, sometimes the partnership can grant a loan to the partners. It means that amount of money will be owed to the business, so it will be classified as an asset. But sometimes the partnership can acquire a loan from a partner, so that will be the liability for the business. In the partnership, you will see by the time when you record in the books of accounts, you will realize that there is something called the partnership agreement. Under partnership agreement, the partners may decide to calculate the interest on capital, interest on current accounts, and even the interest on drawings. Remember, the interest on capital will be classified as an expense to the business because the partnership will be paying this interest to the partners. Okay, but the interest on current account will depend. So if the balance of the current account of the partner is positive, it means the business or the partnership will have to pay that interest to the partner. But if the partner's current account is unfavorable, it means instead of the business paying the partner will pay the business that particular amount of money. That is the interest on current account. So the interest on current account sometimes an income or expense. Again, we do have what we call the interest on drawings. Remember, drawings are taken by the partners for own use. So at the end of the day, these drawings will be charged an interest. So that interest is charged by the business. It means the interest will belong to the business. That's why the interest on drawings will always be the income, because the partners are being charged interest by the business, by the partnership. Sometimes we do pay salaries to the partners. So salaries and bonuses to the partners, it means the business or the partnership will be paying to the partners. That's why we classify this as what? As an expense. We do have an account called appropriation. Appropriation sometimes is called the distribution account. It means in the partnership, the profit or losses which have been made need to be distributed amongst the partners. Sometimes we use, they use the ratios. Sometimes we can even divide equally depending on the partnership agreement. So in a nutshell, the appropriation account is an account that is used to distribute the profit, the remaining profit amongst the partners. Okay, so this is very much important. So, like I said before, we do have the drawings account. Remember, the drawings accounts are not expense, they are negative owner's equity. So the drawings, as I said, they are withdrawals of cash or non-cash. So even if you took a trading inventory for own use, that will be regarded as what? Drawings. So obviously, if you took cash, it will affect the bank. Can you see? Or if you took something like maybe trading stock, it will affect the trading stock. But the drawings at the end of the day must be closed off to what? Current account. Like I said from the previous slide, if you've got drawings, these drawings will have a negative impact on the current account. It means you will always see drawings on the debit side of the current account because the drawings have got a negative impact on the current account. We do have the interest on capital. Like I said, the interest on capital, this interest is paid by the partnerships to the partners. So it will be an expense to the partnership. That's how we debit the interest on capital. But this interest is paid to the partner. So it will be like an income to the partner. So at the end of the day, the partner's current accounts must be affected positively by the interest on capital account. That's how we credit current account because of what? Of the interest. Remember, the current account is an owner's equity, and the owner's equity increase on the credit side. And thereafter, because we said this this interest on capital is an expense to the partnership, it will affect the appropriation. Remember, appropriation is an account that is going to be used to divide the profit amongst what? The partners. You do have the interest on current accounts. Like I said, it can either be positive or negative. So if the partner has got a positive current account, it means the business will have to pay that interest to the partner. But if the partner has got a negative current account, it means the partner instead will pay the business or the partnership that particular interest. That's why sometimes we debit the interest on capital. If we debit it, it means it's an expense to the business. But if we credit it, it means it's an income to the business. Okay. And again, it will depend, the impact on the current account of the partner will depend on whether the partner has got a positive balance or a negative balance. So the current account can either be affected negatively in the form of a or debit. Sorry, here I meant credit. It can also be affected positively. So my apology for this one, I meant credit. So just change this to be what? A credit. And again, the interest on current accounts are closed off to the appropriation. Interest on drawings. What do we mean by say the interest on drawings? Remember I said sometimes the partners take something from the business. So the partner, those partners, the interest because they took drawings. So the interest on drawings will always be an income to the business. That's why, as you can see here, we credit the interest on drawings because the partners have to pay that interest to the business, and we debit that the current account of must affect because of what? Of the interest on drawings. Okay. Interest on drawings must also be closed off to what? To the appropriation account. Okay, you need to check this. Salaries, again, these are expenses. As you can see, they are debited. And again, they need to affect the current account of the partner positively. And again, the salaries of the partners are closed off to the appropriation account. The same applies to the bonuses. They are expenses. As you can see, we debit them because they're expenses to the business, but because they affect the current account of the partner positively, we credit that. Remember, the bonuses are given to the current account. That's why I credited the current accounts, because we need to increase that particular account for the partner. And again, this must be closed off to what? To the appropriation account, so that we can be able to calculate the remaining profit to be divided amongst what? The partners. Now, let's talk about the profit sharing. Okay, ignore this bonus to the partner. So, remember, the profit sharing can either be according to the ratios. The question will always tell you. Sometimes they tell you about how to divide this particular amount of money. Okay, so it means we need to make sure that we check the partnership agreement. If the partnership agreement is silent on the appropriation of the profit, we need to appropriate according to the capital contributions. Okay, so but if, however, these contributions are not specified, the profit and losses must be shared equally. Thank you very much, guys. I hope this makes sense. Thank you very much.